Markets in Asia fell across the board on Wednesday as investors digest key economic data out of Japan and South Korea. Unemployment in South Korea fell to 2% in August, the lowest it's been since 1999, while corporate confidence in Japan fell in September among both manufacturers and non-manufacturers. Meanwhile, in Europe, markets opened lower as traders gear up for the latest US inflation figures set to be released later on Wednesday. Overnight, US stock futures were little changed from Tuesday's trading session, with all three major indexes posting losses. Let's get more on this now with Naeem Aslam in London. He's Chief Investment Officer at Zay Capital Markets. Naeem, thanks for joining us this morning. Now, investors are eagerly awaiting that key US inflation data. What are your expectations and how do you see markets reacting?
Sure, thanks for having me. I think there are two numbers that we've got to watch out for. Number one is, of course, the forecast, which is for today going into this meeting is 3.6%. And the other number from our perspective that we are looking at is the low since May 2022, and that is the reading from July, 3.1%. Now, anything between 3.1%, 3.6% would be considered and deemed as a safe reading. And we anticipate there won't be a lot of volatility in the market. Why? Because a large number of investor community already believe that the Federal Reserve may increase the interest rate by 25 basis points, although our base case scenario continues to remain that the Federal Reserve is very much done in relation to its interest rate hike cycle. But if the reading, inflation reading, prints in number which is above 3.6%, then all bets would be off and markets could see some serious sell-off, because then the concern would be, okay, where do we go from here? What is next for the market? How so that the case of a soft landing would be out of the window. Everyone would be very much focused on lending. Why? Because the Federal Reserve will have to take very aggressive measures to control the direction of inflation, because what they cannot afford is a wrong turn in terms of inflation and undoing of all the hard work that they have done so far.
Right, Naeem, I want to ask you about oil prices too now. They've remained at 10-month highs, with Brent futures currently at over $91. Are we going to see these prices rise further?
So our base case scenario is that energy sector is where you don't want to have any short positions. This is a sector which is very much geared for more gains from the short term to a medium term basis, because investors are very much concerned. They know the supply is the biggest sensitive part of the equation now, because obviously you've got two equations, demand and supply equation, because Saudi Arabia, especially among the OPEC plus countries, is very much active and playing a very active role. And they keep an eye on everything, no matter how things are going in terms of economic activity over in China, or how geopolitical tensions are escalating, which are resulting in a slower economic activity between the US, China, and the EU and allies and all of that. But from supply perspective, Saudi Arabia is very much on one page, and that is they are not going to allow another rise in prices. So for us, the base case scenario is, I think, the support or the level where we see major markets falling to only could be between $85 price level in terms of a Brent. And while we think that the room is still open for prices to continue their flirting with the level of $100 per barrel.
Right, Naeem Aslam there in London. Thank you, as always.
Thank you.
Now to other top business stories from around the world. The UK economy has contracted more than expected in July due to strike action and unusually wet weather. Gross domestic product shrank 0.5% month on month, reversing an expansion in June. Services output also dropped 0.5% during the same period, while manufacturing production was down by 0.8%. The biggest US antitrust trial in decades began on Tuesday as the Justice Department takes on Google. The tech giant has been accused of illegally limiting online search options by paying out $10 billion a year to Apple and other business partners. Google says its business agreements do not prevent rivals from developing their own search engines or stop companies such as Apple and Mozilla from promoting them. And German footwear brand Birkenstock has filed for an initial public offering in the United States. It's the second biggest European company seeking a foreign listing this month. No financial details of the offering have been revealed, but net revenue for the 6 months ended March 31st rose by 19% to almost $700 million.